Hello, good morning and welcome to the Finance Show here on TIP TV. It's Friday the 19th of May and I'm joined by Marc Ostwald, who's a strategist at ADM Investor Services International. How are you today, Marc?
I'm okay.
You survived the flash crash on sterling?
Yes, survived that peculiar event that was. Fortunately, it was during New York time, so it didn't have quite the same disastrous consequences that happened last year, but it is alarming nevertheless that liquidity in New York time in one of the major FX crosses should allow that to happen. It's a pretty
fringe currency. It's a fringe currency now, isn't it?
I don't think so.
Nobody cares about the pound anymore.
Yeah.
And the other thing, obviously, it's very easy. I mean, obviously, lots of people make the markets very complex, but buy the dip has been the mantra for the last 8 years, and it remained in place even this week.
Yes, I think there's sort of two aspects to this. There was a lot of excitement on Wednesday, but I mean, it was only a 1% move, if we put it in proper perspective. And we only got excited by it because people have actually been waiting for something to happen which gets us out of these net changes day to day, which have been less than 0.2% for most of the past 3 weeks. I'm not 100% convinced that wasn't actually necessarily quite a negative signal. I think the buy the dip mentality is definitely still there. That's going to take a long time to breed out. But today is equity options expiry across the monthly ones as opposed to the big quarterly ones. And what one's seeing is there's quite a lot of rolling off of protection rather than protection being rolled over. And as a rule of thumb, one can always say that if protection on the downside rolls off, then the exposure on the downside starts to get bigger if you do get a big move. We shall see what happens.
Okay, let's have a look at the slides of the day. Most popular in business and finance. Tory manifesto targets business, or more like anti-business as far as I'm concerned, as Theresa May signals more government intervention. Sounds like a great Lib Dem or Labour policy here.
Yes, I mean, there's actually a very good article, well worth people looking up on the net, by Flipchart Rick on the Tories turning red, as this seems to indicate, because I think it's so under-discussed in the mainstream media. It's basically just an assumption that the Tories stand for something, and actually this manifesto doesn't really look very Tory at all.
Yeah, but the whole point of this, the whole point of the Labour Party being in disarray is because people don't want or like centre-left policies anymore, and they've gone to the right. I mean, obviously the populism is one of those things. Is this the right thing to do? It's not exactly with the mood of the people, is it?
I think going after business to a certain extent will be quite popular in the sense that a lot of people feel like it's the consumer who's paying all the taxes, and that a lot of corporations, obviously most obviously in the tech sector, don't seem to pay much in their way of tax at all, and they should be doing more. So in a certain sense, I think it gets a certain amount of traction. Whether it's actually effective when one's looking at the complex process of Britain leaving the EU and all the potential hurdles that are associated with that, to be implementing things which are ostensibly anti-business, is very questionable as a tactic.
Especially these days, big business can just say, well, we're going somewhere else. We're going
Precisely.
Going to the Far East, we're going to Australia, who cares?
Yeah.
All right, next up we've got Trump pulling the trigger on NAFTA negotiations. Is this a market-moving type of event?
I think we do need to pay a lot more attention to this. I found it biggest joker I've saw overnight in this context is Boeing being allowed to go after Canada's Bombardier, which is fractionally in size terms of Boeing, for dumping on the US market. That seems to me somewhat farcical. But if that's the way these NAFTA negotiations are going to go, and it's not just about Mexico, obviously, it's quite a lot about Canada, then this looks like sort of an isolationist move, which we feared as one of the big negatives of a Trump regime.
Doesn't seem to like Mr. Trudeau very much either.
Apparently not, no.
He's just better looking and younger and more popular. That's the problem, isn't it? Next up, we've got US inflation expectations dropped to low since November. US yield curve measure flatter since US election. The hint of recession.
I want to be really, really careful about that. It's really much more a reflection of the flows out of equities, which is strong flows out of equity funds in the US into bonds as people seek a little bit of protection. it's not really on an inflation view at all. But it shows up then in break-even inflation rates, and hence you get headlines like that. But they sort of misunderstand what the flows really are about. It's just people being slightly more defensive rather than because they feel that equities look somewhat overvalued.
Okay, and going on to the economic calendar, which is rather thin today. Bullard, anything?
Well, actually, it's not the Fed speak that I think one should be focusing on today. We've got three ECB speakers, Mr. Prate, Mr. Constancio, and the heavyweight, Mr. Curre, who yesterday was warning everybody basically that you're on notice now. We're going to start changing our forward guidance as of June. And we're also going to start formulating how we're going to get out of QE. And I don't think markets are quite prepared for that. They think it's going to be a very long process of unwinding the current QE program and going to neutral, not actually selling any of its balance sheet. We shall see.
So that may be the explanation why the euro's heading for the stars.
Yes.
Rather than Macron or anything else. I mean, people have already been factoring that in.
It's far more related to the ECB, and it always will be, because at the end of the day, everything is always in the FX market about rate differentials. And if the ECB is not going to be lagging the Fed in terms of a tightening cycle, though one would say I don't see the ECB really doing much in the way of interest rate hikes before the middle of next year. They don't seem to be minded that way. You're going to have a lot stronger data, and you have to see core inflation much closer to 2% before they hike rates. And first of all, they need to actually start tapering their QE.
Okay, let's go on to FX sentiment, where we see that people are totally into silver, totally into gold as well. Very short of sterling, dollar Canadian, and the euro. None of those positions would have been causing them much joy in recent days, I would have thought.
No, definitely not. But I can see the justification that sterling does look against the dollar like it's in a 120, 130 range, and so people are tempted to open up small shorts above 130.
And short of euro sterling, is that also a little bit of a brave call?
I think at the current point in time it's probably justified, simply because you may actually see rate differentials with the euro area tighten up, i.e. euro rates going up across the curve, and that leaves sterling looking rather vulnerable, given that it's got unfavourable rate differentials and real interest rates. We've got the real interest rates here in the UK are -1, -2. And the economy is still growing, and inflation's up at 2.7%. You start looking at those real rates and you say, wow, do I really want to hold this currency?
Yes, indeed. All right, let's go on to zinc. I'm not sure that's appeared here on this program before, but zinc develops a bearish point figure breakout at 720 with a price objective of 580, a stop loss of 880. Presumably that's the Trumpflation situation.
It's a combination of things. It's certainly people giving up a bit on the Trumpflation trade, but it's also this squeeze on credit in China, and particularly in margin positions. And we know that the Chinese were the instigators basically last year of a lot of the industrial metals rally. And it does look to have run out of steam. Okay,
on to the FTSE 250, which is from Investors Intelligence here, developing a bearish point figure breakout at 19,600. Price objective of 19,250 and stop loss at 9,900. Almost forgot how well that's done since the start of the year.
Inordinately well. And obviously this is a much better measure of UK PLC than the FTSE 100, which is 55% dollar earners. The only thing one would say is, going back to what you said earlier, well, that chart actually looks like every time it forms one of these bearish formations, there's a buy the dipper. Yes,
exactly. Yes, right. Okay, let's go on to the next one. The trade of the day, Barclays looks like a buy situation, bouncing off the major moving average there, buy around 213, objective 220, 223. Stop losses below 209, so decent risk reward there. Presumably that's also betting on Jess Staley staying in his job.
And presuming that basically things are going to get better for the financial sector, and I'm not 100% convinced that we're there in a situation where you start seeing things like Dodd-Frank roll back and a concerted upward move in interest rates in the major economies, which would then obviously improve in net interest margins. So we shall have to see on that one.
Okay, let's go on to broker recommendations, where I believe the CEO of Lloyds has bought another £36,000 worth of shares at 72p, perhaps calling the top for now, but overweight according to Barclays Capital with a 77 pence target. We've got polymetal or polymetal, as some trendy people call it. I'm not quite sure how you're supposed to. So basically, higher target there from Berenberg, 960. The old target now up to 1090, which I suppose is going a bit against the grain in terms of the mining sector has been rather soggy in terms of the shares.
Yes, having had a very, very good run from the middle of last year till the end of Q1.
Yes, so we're at 10.59 at the moment, so it's just a little bit above the market. And then the classic, the big Trumpflation trade on the stock market, Wolseley. Shares currently at £48.88. And Berenberg able to enjoy the ride that they've had. Old target 42 blown out of the water and now up to 57. I think that might be going a little bit too far there.
Slightly overcooked.
Exactly, yes. But that's it for the first part of the finance show. Thank you to Marc Ostwald, strategist at ADM Investors Services, for opening the show for us.
Pleasure.